22, it's been actually unchanged. We opened around these levels and we are right there, even right now. Take a look at what's happening on the bank nifty, which is, again, pretty similar to the situation where we were yesterday, which is right under the 38% retracement. It's the weakest of the four indices, the Nifty, Midcap, Small Cap, and the Midcap Index. Broader markets are doing much better, and advanced decline, etc., is good, and indices are up between 1 and 1.5% or so. So overall, really nothing to complain. Although, when we start with 140, 150 odd point gain, and you got positive global tailwinds, you would have thought that maybe you can build on it in a more meaningful way, and perhaps the market trends up, which is not the case so far.
Well, it's interesting because the way the option writers had positioned themselves, 19,100 straddle, which is a call and a put together. At 12, it was trading at around 40 odd rupees. So that was telling you that the street is looking at close to around 19,060 as a support and 19,140 as a bit of a resistance. And that's exactly what's played out so far in the last half hour or so. The minute we went closer to that 19,150 mark, we've come off about 20 points from there. So we're absolutely in the range. The good part about today's trading session is a seamless transition that we saw in the sectors. The Nifty Bank was underperforming. Thereafter, it's bounced back from the lows. We are now seeing metals come back as well. So the metals index should come up for you. Strong commentary coming in from Tata Steel. Nigel spoke to the management at around 1:30. Thereafter, JSW Steel has picked up as well. Hindalco is at the high point of trade. So the metals index is doing well. And a couple of these FMCG names which weren't doing well in the morning or saw a bit of a sell-off post the numbers are coming back. So HUL has moved to the high point of trade. Nestle has moved well. Perhaps the street is now looking at the festive season, which kickstarts next week, as a bit of a trigger for some demand recovery. Margins have been good so far. The only question is when and how the top line recovers. Midcaps, no problem whatsoever. 500 runs on that index.
No, that's right. The Adani Group stocks are a little bit nervous. You have Adani Enterprises, Adani Ports, Adani Power. All those stocks, they were holding well in the green, but they have come off a little bit from the highs of the day. So some of them should come off for you. That's Enterprises. Let's get our ports as well as Adani Power coming off a little bit from the top. How do you position yourself, though, in the final hour of trade? Mitesh Tucker joins us to help us out with exactly that. Hi, Mitesh. Good afternoon. Well, it's that sort of a day, right? When we spoke earlier today, we were up close to under 130, 140 points. And we're speaking towards the last hour of trade, and we're still up 130, 140 points. So a bullish perspective will be we're still holding in the green. But a bearish perspective will be, hey, you couldn't build on that. What's your take?
So, Nigel, I think looking at the last few days of data, good afternoon, the fact that we haven't fallen is a positive. I've been maintaining that, the market has had a leg of decline, and the expansion which was happening on the negative side on the hourly charts has stopped, while the daily and the weekly charts still, are mildly on the weaker side. The immediate charts have kind of stopped suggesting that, we'll fall further. So I think this could be a phase wherein we go through some choppy consolidation, and therefore you will see this intraday swing which are happening. We had a big gap up which, failed to follow through, and this gap up was on the back up on the back of the movement which was negative yesterday. So I think this kind of movement is in line. The only stability or the sign of up move getting stronger will come if the Nifty starts getting past and closing above 19,250 levels, and the Bank Nifty gets past 43,450 levels. So till that happens, I think while the overall trend is negative, in the short term, I think the market is just trying to do some kind of consolidation after a big decline. So I think that's the kind of movement we are into. That way, I think trading therefore for us has been more stock specific. I have a buy on NMDC with a stop at 156 for targets of around 170 on the upside. And Tata Power is another one which is coming out of a correction. So buy here with a stop below 240 for a target of 253.
Okay, Mitesh, thank you very much for that. We'll come back to you for more as the day goes on and we get into the last final minutes of trade. REC and PFC are surging in trade. REC is now up a full 8% or so. And why not? Numbers seem to be very, very strong. Ritu is here with key takeaways from the numbers and, of course, the analyst meet highlights as well. Ritu, take it away.
Well, Prashant, it was a strong show by REC in the second quarter, and what's got the street even more excited is the strong guidance which has now been given by the company, because, for the first time in more than 2 years, REC posted an improvement in margins and spreads and the best asset quality that we've seen from the lender in 23 quarters. The management now says it's going to be able to reach its targeted 10 lakh crore assets under management target 2 years ahead of the guided period by 2028 itself. It also expects the margins to be steady at around 3.5% and is also hopeful of resolving the remaining 10 large stressed assets over a period of the next 2 years. It does expect the cost of funds to rise slightly in the coming few months, as we've been seeing across the industry, but they don't see that as any major concern. More specifically on the business front, now REC expects the non-power infrastructure business to be 30% of their AUM by 2030. They expect the contribution of loans to the private sector, which is currently at just 10% with 90% dominated by the public sector, that mix to change by 2030 with 30% coming in from the private sector. Now, all of this essentially indicates more diversification from the company. It has also started financing projects in renewables and green energy, solar projects, and signed MOUs of 2.8 lakh crores, which is already in the pipeline with 25 to 26 entities. It expects that renewable energy AUM to reach 3 lakh crores and infrastructure to be 25% of the book by 2030. So strong guidance, steady on the margin and more diversification in the portfolio mix. This strong commentary has got the street excited.
All right, strong commentary's got the street excited. REC and PFC, both of them moving higher, usually move in tandem. A bunch of other stocks which are doing well are the real estate stocks. We did get Godrej Property numbers. We'll, get an analysis on that in just a short while. But the stocks moved to the high point of trade, and it's not just the only stock in the real estate pack. You keep an eye out on something like an Oberoi Realty. That one too has moved to the high point of trade. Macrotech developers also, the ones that have the Lodha builders. Rather, they are the stock is moving higher on that counter as well, up close to around 5%. We have Devin Choksi joining in now. Devin, good afternoon. What do you think of the Mumbai-based real estate space, and your thoughts on REC and PFC?
Good afternoon, Mangalam. Well, REC, interesting thing is that I think the company has typically, I think, started showing the growth of around 20% in the lending books, the AUM. From currently around 4,75,000 crore worth of AUM book size. If they have to double themselves, I think then in next 4 years' time, at this pace of growth, I think the book will get doubled. And will not have much of a doubt in mind, I think, whether this possibility would exist for them. Because I think company stays currently, I think, very well capitalized, as I see. Now being under the fold of PFC, I think this company has better abilities now to even generate the liability side of, I think, the franchising. So from that perspective, I guess I think the growth could be possible, given the kind of outlook in the power sector, both in generation as well as in distribution, and at the same time in the renewable segment. I think the company is very well positioned. Maybe I think the big thing would be that I think sustainable performance. Should it continue, maybe I think the stock has the power to produce effectively a steady set of return for the investors.
Okay, all right. Hi, Devin. Good afternoon. Devin, what about Tata Steel? The numbers look quite disappointing, but the stock recovered from the day's low, because I spoke to the management earlier, and they are guiding for maybe Q3 will not be as bad. I don't know how they're going to manage that. But they're saying that the coking coal cost itself will go up by only around $10 in Q3. Their competitors are talking about it going up by $40 to $60. How will you view the stock at around 116 rupees?
So, Nigel, good afternoon. Well, I guess I think on one side, they have the arrangement in place for sourcing the coking coal at a cheaper cost, I think, which gives them a power, I think, to basically ride this particular storm when the input cost is increasing. On the other side, the market remains, I think, fairly comfortable from the demand perspective for India geography in particular. Of course, I think the European geography would remain as challenging as it was before. But I believe that I think the worst seems to be getting over as far as I think the business is concerned. Particularly, I think the steel demand is concerned. I guess I think the worst is getting over. Given that situation, if the crude oil prices remain steady and the input cost remains steady in resultant way, then possibly you are likely to see the better outlook for this company on the profit number side. Of course, these numbers, I think, are basically one-off as far as I think the write-off is concerned from the UK side. But if you minus that part of it, I guess I think the company's outlook remains, I think, quite steady. And maybe the corrected price becomes an opportunity for the people who trade in commodity. I think this is a better opportunity to buy at a corrected price.
All right, they've been hanging there. We're also awaiting Dabur's numbers, should be out on the exchanges shortly. So while we do that, let's also tell you what the street is anticipating this time around. Dabur, just like all the other FMCG companies this time around, has given their cheat sheet too. The stock is down around 15% from its 52-week high, trading at around 40 times. So there is valuation comfort as compared to others. Consolidated revenue growth for Dabur is seen between mid to high single-digit growth. Business will see a high gross margin expansion, and this is as per their second quarter update. But a lot of that will be reinvested into ad spend. So that means that the operating profit will grow in line with revenue. So there won't be any margin expansion, but there won't be any deterioration either. 7.5% growth in their top line. The street is working with a number of close to 3,200 crores on their sales, consolidated sales. The EBITDA is around 650 crores. That's the expectation. The margins would, as a result of which, be around 20.1%, unchanged from last year. The net profit, however, grows just 3%. The number you're looking at is a little over 500 crores. The reason why that happens is because of the amortization of a lot of the acquisitions that the company has done, including the likes of Badshah Masala. Domestic volume growth seen in mid-single digits, so 4 to 5% is what the street is pegging its estimation towards, and that's largely because of the company's second quarter update. Healthcare and personal care segments, home and personal care segments, will see growth in high single digits. F&B, which is mostly the juices portfolio, which will not do as well because of two reasons. One, there was the monsoon, so seasonality factor comes in. And the second, festive season has moved to the third quarter, so that will impact their business. So that will see a bit of a decline as compared to last year. Badshah Masala expected to post growth in high teens. International business will see double-digit constant currency growth, but because of the devaluation in a lot of the currencies in the African areas for sure, will result in a translation loss in the international business as far as the translated currency growth is concerned. Constant currency will still be double-digit. Management's commentary on demand will be extremely crucial. But speaking about the consumer space itself, we got Godrej Consumers numbers yesterday post-market. It was a strong show. Given the environment, Britannia, the street likes the margin expansion, but for a lot of the other companies, there was margin expansion. The street was asking for top-line growth. How do you view the consumer space right now, and what would be your top picks here?
So, Mangalam, I think interestingly few observations. In the last year, when the input costs were high for most of the FMCG companies, particularly in the food category, I think they had reduced the size of the packages. Now, this time around, I think the situation is better. The input cost is under control. As a result of which, they have gone back into the same kind of a volume size which they have been up till now selling. So to a greater extent, I think the transition has got probably completed, wherein the older stock with a smaller packet size going off the shelf, and I think the newer stock with a higher packet size coming onto the shelf, which is likely to generate better revenue going forward in the subsequent quarters. Given that kind of a situation, on one side you have a lower cost, which is I think quite managed well by most of the companies, and given the fact that I think they are now having the advantage of I think larger packet size, probably I think the volume as well as revenue and the profit should be looking up from here on. I guess I think in this particular quarter, we have only seen one effect, that is I think the margins have expanded because of the lower cost. In subsequent quarters, we are likely to see the higher amount of contribution to the top line as well as on the profit side. And not to forget few things that I think most of these companies have worked significantly on the reverse logistics side, wherein their products are now basically I think supplied to the market based on the market demand. As a result of which, I think they're penetrating the rural market so well. And I think that assures that the revenue and the profit could possibly result into better numbers for most of these companies. So we remain reasonably confident about the possibilities on the FMCG side of the business for both these companies, given the power in the hand of the consumer for spending.
No, got that. Devin, have you been tracking the moves on Jaiprakash Associates? You know, I just looked, it's up 90% from what, 9 rupees. It's gone up to 17.5 rupees, 90% in 10 days. These are low value stocks, but you got to look at the market cap now. It's about 4,300 crores. Any thoughts? There's been some news, some positive development, although it's not fructified into anything. But go on, if you have any thoughts.
No, Prashant, sorry, I have not been tracking this company, so I would refrain from putting any.
No, I mean, can't blame you. It's been kind of off the radar for so long. The other one is, again, I have a feeling you may not have looked at it, but Idea. I mean, very sharp moves recently, about 7% higher. Again, hopes for a long time that there will be some equity infusion which will come in, whether promoters will put in money, etc. But go on, if you have anything on Idea.
So I think the news item which reads, which is, I don't know whether it is fully confirmed, about 2,000 crore coming out from HDFC and going to Idea. I'm not too sure whether I think that's a relevant thing, but if at all, I think if it has happened, then one would be a little curious to understand as to how exactly this money has been given to Idea, for which I think they would be in a position to pay some part of their obligations to the government. But on the other side, I think if HDFC has given this money to them, then probably I think a question would be arise how exactly this money will come back to them. At this point of time, as I see, I think every business verticals or every metrics, I think on the business side, is not something which is giving me confidence. Neither you have got better ARPU, nor you have got, I think, the 4G, 5G penetration, nor I think the clarity about how they are going to manage this particular balance sheet issues. All of these issues are remaining as questioned, I think, as before. And probably, I think that's the reason for which we believe that I think it would be safer to not immediately dabble into it till the time you get good clarity on those front, I think, from the company.
Okay. Adrian, we'll take a quick commercial break here. The market's up 127 odd points. We're just still about 19,100, but lots of stuff to discuss. So we'll take a quick commercial break here. We'll come back, and we are back with more on the other side.
Well, meanwhile, a bunch of stocks doing extremely well. BHEL from the broader markets are actually surged to the high point of trade. Midcaps are doing generally a lot better. They've been doing better since the morning, but now they moved to the high point of today's trading session, the index that I'm talking about, as has, a bunch of other stocks that we have. Dreamfolks, which opened well, has now surged to the high point of trade. AkzoNobel reported numbers about an hour ago. Decent numbers. That stock too is higher. And as we speak, at the bottom of your screen are the numbers coming in from Datamatics too. But speaking about results that came by today, Karnataka Bank is the one that has seen a bit of a slip post the results. Ritu is back with us. Ritu, what exactly did the street not like about Karnataka Bank?
Well, the P&L itself, it's a weak set of numbers for the second quarter that Karnataka Bank has posted, and there's been a huge decline in the operating profit. The profit after tax also down significantly, almost 30% year on year. You had the net interest income come in at 822 crore rupees, which is up just 2.45% compared to the same period last year. The other income was also down by about 4% compared to last year at 249 crores for this quarter. Operating profits saw a massive decline in Q2, now at 522 crore rupees, down about 9.6% compared to last year and more than 13% sequentially. Profit overall, that stood at 330 crore rupees. It's actually a 19.8% decline YOY. The deposit momentum, it's not been bad. It's about 9.7% growth that Karnataka Bank saw. That's a 3% growth sequentially, and advances growth, which now stands at about 65,422 odd crores. That was up by almost 9.3% compared to the same period last year. Asset quality did see a marginal improvement though. It's come in at 3.47% gross NPAs during the quarter compared to 3.68 in the previous quarter, and the net NPA ratio has also improved to 1.36% in Q2. The calculated provision coverage ratio, that's actually come down a bit, 61.75% during the quarter. The CD ratio at 73.1% saw an improvement, and still we had weak overall, operational numbers. So I guess that's what the street isn't really liking.
Okay, all right. Thanks a lot for that. Ritu's stock is down close to around 6%. Devin, what do you make of this one?
Not paid enough, I think, understanding on the subject. It's little weak on this particular aspect, more because we believe that I think the opportunity wise, if you are looking at the banking space, I think you are getting far bigger opportunities in some of the larger banks, corporate banks, where the AUM growth is growing at a steady pace, I think more than 20%, and the asset management also, I think, is far better. I think the NPAs, the gross as well as the net NPAs, in case of, I think, some of the larger NBFCs and also some of the corporate banks, have been far better than some of these smaller mid-size PSBs. I think from that perspective, I would rather like to keep my energies focused on some of the larger ones, where we see the AUM growing to double in next 4 years' time, given 20% kind of growth rate on which they are operating. Maybe small and mid-sized banks, public sector banks, will require a good amount of consolidation, for which I think one would start looking at them from the investment perspective.
Okay, all right. Thanks very much, Devin. Sort of good getting that perspective from you as always. And thank you for joining in. So the market's still there. It's like almost where the levels are essentially where we opened on the Nifty. So we're up 120, but it doesn't feel like a vibrant kind of market, because nothing incremental seems to have happened, except of course stock-specific reactions related to earnings mostly. But there's enough of that. Mithun Aswath is with us, managing partner at Kiva Advisors. Mithun, good to have you with us here. Good afternoon. So we had the Fed meeting last night, and to my mind, it did seem like it's a very significant departure from what we heard from the Fed chair. Do you think it'll come to be that? Will the markets have a bit of a clearer run from a global perspective? I mean, if we believe that the market here is special in the sense that it's the first amongst equals in terms of emerging markets, the global headwind is kind of off. If it is off the radar after the Fed last night, do you think the market can rally into the end of the year? Seasonally, this is a strong time for equities globally.
Yeah, thanks. Good afternoon, Prashant. I think what you mentioned, the Fed has not hiked, and they've kept, the optionality of hiking once more open. But even possibly they are at the end of the hiking cycle. and the markets reacted favorably yesterday with the bond yields in the US coming down to 4.7%. And the tech stocks rallied quite sharply with the Nasdaq over up over 1.7%. Now, the rub-off to India will likely happen, and we've seen today the markets have opened well, but it's still to be seen whether FIs will return. I think the FIs are focused more on events which are associated with India, which would be the 5 state elections which are coming up, and then the general election. I think the if the incumbent government wins at least a couple of states in the 5 states elections which are coming up, I think the market then will have a sigh of relief, and you could see actually institutional investors come back into India in a big way.
By couple, you mean, just to be sure, by couple, Aswath, you mean 2? Or was that said more figuratively? Because that matters a lot. At least 2. At least 2 and more. Okay, I got that. Coming back to you, Mithun, but I think Dabur numbers have just come out.
Yeah, Dabur numbers have just come out, and they look like it's a mild beat. Definitely on the top line, the company's reported consolidated revenue from operations coming in at around 7.3%. The street was working with a number of around 7.5%, but revenue in constant currency is close to around 10.4%. Operating profit too has posted a growth of about 10%. The EBITDA has come in at 661 crores. The street was working with a number of 645 crores. So as a result of which, the margins have seen a 50 basis points uptick. And this after the company has given their second quarter update as well. As a result of all of this, the net profit has come in at around 515 crores. Domestic volume growth has come in at 3% versus expectations of 4 to 5%, but that's the organic volume growth. If you account for Badshah as well, then the volume growth is close to around 5.8%. So that's largely in line with street expectations itself. The international business on a constant currency basis posted a revenue growth of around 24%. Ad spends for the quarter, remember, the margins have beat expectations despite the ad spends increasing by about 42% year on year. And if you just take a look at their internals, the home care business reported a growth of 15%. Ayurvedic and ethicals, which had a high base, grew by just around 8%. Toothpaste business showed a high single-digit growth, but that's still higher than the market because the naturals portfolio in the toothpaste business is not doing too well. And at the same time, the Badshah business, which was expected to show mid-teen sort of growth, has grown at 16.4%. All in all, it looks like it is slightly better than expectations. And that's what the stock price move is also reflecting as well. From a top line perspective, a mild beat out there. Volumes, including Badshah, better than expectations. EBITDA and net profit above expectations too.
All right. So we'll get the management in a short while from now to talk about those numbers. But we're talking to Mithun. Mithun, thanks for waiting by. You've given us your outlook. It was always good to hear a far more dovish Fed chair. At least that's the way the street has read it. Now tell us about individual stocks. I believe a couple of stocks that are on your radar include Aster DM. The stock traded at a sharp discount. Now the management has been saying numerous times that maybe they look to divest their Middle East business. How do you see things shaping up, and what are the triggers from here on?
Yeah, thanks, Nigel. I think the healthcare sector, especially the hospitals, you've seen a re-rating post-COVID as occupancies and normality of surgeries and improve, and that's happened across the space. Aster DM, has a large business in the GCC area, while the India business would be about 1/3 of their revenues. However, the company is looking to expand the India business using the proceeds that they will get from the potential sale of the international business. And we actually do think, EV to EBITDA at a consolidated level, the company trades at a significant discount, maybe about 40 to 50% discount compared to peers. And the India business itself trades at about 15 times, while, even new listings, smaller companies are trading at over 20, 25 times EV to EBITDA. So we think there's an anomaly in terms of valuation there. And it does present an opportunity with that key trigger of potential unlocking of the GCC business.
All right. Mithun, I remember back in the day, you were also pretty positive on names like Tata Consumer, Marico, and Cera Sanitary Ware. Wondering whether you still continue to hold these names, and what are your thoughts on these companies, they reported their results recently.
Yeah, Mangalam, I think Cera Sanitaryware continues to deliver growth in the region of about 15 to 20%. They've also guided for about 2,900 crores of revenues by September 25, and that also will lead to a CAGR of about 20% from here. So I think that continues to be something that we are very positive on. It's a leader in the faucets and sanitaryware space, and they continue to grow from strength to strength. So no worries there. I think apart from those, the two companies that you mentioned, Tata Consumer, we continue to be quite positive on. It's a company where the core business is a historical business of salt as well as the tea and coffee franchises, while they're trying to grow an FMCG business from scratch, and that has been growing now. And we continue to be quite positive on the new initiatives that they've taken. Be it on the Sampan space, where they are extending categories across for the FMCG side. For Marico, I think it's been a little bit more lukewarm in terms of numbers. Their core business has still to take off. The volume growth has been quite low. However, we do think in the second half there should be some improvement, and that is what the company is guided for. Small part of their overall revenues now, but those businesses are growing at 25 to 30%. And hopefully over the next 3 to 5 years, they will start contributing meaningfully to the overall company.
All right, Mithun, since we're talking stocks, final one before we let you go. BEML, that's another one you're quite optimistic about, right? I think we have Mr. Kalyani, who joins quite often. Ask him what's the update out there. He said that we also are waiting. But BEML, your view on the stock from here on?
I think, Bharat Earth Movers obviously benefits from the government's impetus, be it on the railways and the defense side. It's been, not as profitable a company because of the huge employee workforce that they have. But, they have brought down the employee workforce from 12,000 to about 5,000 over the last few years. And the management expects that they will not add new headcount, but revenues are likely to grow appreciably. Especially in the defense and railway verticals. They're guiding for the revenues in the defense space to go to about 1,500 crores. And similarly, even in the defense space. So railways and defense could both contribute 1,500 crores of revenues each this year. And the mining sector could contribute about 2,000 crores. But the opportunity size, we think, in the railways and defense sectors for the company is very large. They themselves expect over the next 3 to 4 years, the company could garner about 4,000 to 5,000 crores annually from the defense and railway spaces. So that's a significant jump from where we are. They also expect EBITDA margins to move up between 100 to 150 basis points over the next couple of years. So we think it's a story where, you're going to see strong revenue growth as well as margin improvement.
All right, Mithun, we'll leave it at that. Thank you so much for joining in, and I guess it'll be festive season before we speak next, so wish you and your family happy festivities as well. Meanwhile, while Mithun was speaking, we also had the numbers of Chola Investments at the bottom of your screen. Net profit largely in line with street expectations, a mild beat out there. Revenues growing well for them too. Net profit growth of 35%. The stock has moved higher. It's up around 3%, and Dabur is the other one which we are looking at. Dabur has moved higher post the numbers. It looked like a beat from the revenue, EBITDA and margin standpoint.
Mangalam, I think even the markets are making a bit of that 3 p.m. move.
Yep.
We're trying to move back towards the 19,150 odd mark. I think a couple of banking names have done well. Maybe SBI should come up for you on the screen. L&T as well. No worries in terms of the numbers. But I think that stock is spiking up a little bit. Yesterday it ended lower. SBI has moved a little bit higher. And I think L&T, that's the other heavier weight in there. That's moved up a little bit. Pull up ITC, that's up only 0.8%, but I think maybe it's made a bit of a move in the last 10 to around 15 minutes. So let's see whether or not 19,150 is here for the taking. We'll know in the next few minutes or so. For the time being, slip in a short break. On the other side, Nimesh will be joining to tell us what he's picking up in terms of dealing room news. We'll also get our technical experts with us, and we'll also be joined by the management of Dabur. Action-packed, last 30 minutes coming up.
Welcome back. The stock of the last half an hour has been Dabur. It's reported its numbers, and on most counts it is above what the street was anticipating, as a result of which we've seen an up move. It's at the high point of trade. Ever since the numbers were reported to the exchanges, there has been a bit of a spike in the stock. As promised, we do have with us Mohit Malhotra, who's the CEO of the company, joining us on the phone line. Mohit, decent numbers. Just wanted your thoughts on the full year target now. We're at the halfway mark. Everyone wants to know, the long festive season that everyone's moved to in the third quarter. What have the early signs been? And as a result of which, what can one expect in the second half of this year in terms of volume and revenue?
Hi, Mangalam. Thank you for having me, first of all. And so overall, I think we've got a good set of results, but there have been a one-off legal cost which has hit our profitability a little bit. Otherwise, profit operating margin also would have zoomed up to around 16% for us. But overall, I think the situation is great. We are seeing the rural uptick happening in the economy, which augurs well for us. MSP increases have happened. So rural is looking up. Even emerging channels, which is driving urban, is also looking up. Modern trade is doing well. So is e-commerce business. So urban is chugging up well. Rural economy is recovering, but a little gradually. So I think that augurs well for the second quarter and for the third quarter and the fourth quarter. So we are looking at a high single to a low double-digit kind of growth in the balance half of the year and gaining market shares across categories. That's what we've done in the previous quarter also.
And volumes would be how much?
Volume, we're looking at a mid-single-digit kind of a volume growth, growing ahead of the category. So it depends upon the category growth. We are market leaders in most of the categories. So it will be depending, but high, mid-single kind of volume growth, topped up by some price increases of around 3% odd, which might just happen.
Mohit, I need to ask you about this. There were some litigations against subsidiaries of Dabur, in US as well as Canada, that some of the products were causing cancer. Could you tell us what's your clarification on this, and what's the latest?
Yeah, so first of all, let me assure you and the audiences that this got no concern with any Dabur product or Dabur brand. The lawsuits are against one of the products that we sell in our step-down subsidiary of international business, which are hair straightening relaxers that we sell there. And the litigation is prompted by an unsubstantiated or an incomplete study which was published in the US, and that's been held to be redundant by the Cosmetic Toiletry Perfumery Association in the US. We are abiding by all the regulatory frameworks of the European Union, and those regulatory laws are much more stringent than in the US, which relies on self-regulation rather than a stipulated regulation. So that is the case, and the percentage of the hair relaxer business to the overall consolidated business of Dabur is less than 1% in top line and bottom line. So it's not very material at all. But because it is a class action, so a lot of industry players are involved in it, and Namaste, our step-down subsidiary, also being one of them. But we stand by the safety of our products. We've got all safety studies in place, and we are going to be fighting the litigation, and we feel there is no legal merit to this case.
Okay. But Mohit, I think you yourself said, right, I mean, the standards, etc., are much more stringent. And since this is a class action, these can drag on for some time, and these can also potentially balloon in terms of claims. Do you, while you, of course, believe that you have your stand is clear and your products are safe, etc., and it's also not about the percentage that it contributes to your revenues, right? Because the impact could be disproportionate if it were to happen like that. Would you agree?
Not really so much, Prashant, because we are selling these products in European Union, and we clear the regulatory frameworks of European Union. We've been selling these products have been selling in the market for over generations. So there is no legal merit to this case. Yes, you're right. Legal cost is something that we have to bear. And for legal cost also, part of the legal cost is already a part of the insurance that we have. We have a product liability insurance, and also the insurance which covers a part of the legal cost. So that is also capped to a certain extent. But there'll be amount of around 36 crores that we've incurred in this quarter. And going forward, we expect little lesser amount to be there quarter after quarter. So that legal cost will be in a position to absorb. If you look at the results, this 10% operating profit growth that you've seen in the business is despite the legal cost.
All right. So you are assuring investors here about the legal cost being minimal and the fact that, this may pass through. But obviously, we will monitor the developments as they go along in situations like this. Usually, it is a long-drawn long-drawn story that plays out. So we'll watch out for that. But be that as it may, you've given us your revenue outlook. For the entire year, you expected margins to be in the range of 19 to 19.5%. I wanted your thoughts on whether there is an upside to that or not. Because this quarter, you've done 20.6%. The raw material environment is more or less stable now. Do you think you will have to spend a little more on advertising, or will you maintain margins upwards of 20%?
You see, we had already given a guidance, Nigel, for our operating margin to be in the range of around 19.5. We are in no hurry to spike this up. I think very important to build resilience in demand, and therefore investment in advertising is very critical. We want to take up our advertising percentage to turnover to around 8 to 10% and continue that thrust on advertising. So whatever guidance that we have given, we will at around 19.5. That will definitely come through despite the legal cost as one-off expenses that we people are seeing. So that definitely we can surprise you on the positive end, but I can't really commit to that as of now.
And at what rate will all the other verticals grow? Because we saw some weakness in F&B this time around, understandable because of the shift of the festive season. What rate do you expect all your verticals to grow at in the second half of this year?
See, all other verticals, HPC and HC, have actually grown by around 6% or so, while the beverage business declined by 10%. The food business grew by 40%. We think that to continue the trajectory on food at a high double-digit growth rate, both in Badshah and also in our homemade food business, and exit the year at a 500 crore sort of a run rate going forward for the food business. In the HPC business, we will continue to gain shares in the market like we have done in the previous quarter also, and that growth I expect it to be on a high single digit, and so will be the case for healthcare, where we are coming into the season.
Okay. All right, Mohit, we thank you for joining in and giving us those details. It seems the street likes what you have said. The stock has moved to the high point of the day. We just have a request here that don't make us wait till the end of next quarter to interview you again. Let's have a chat in the next 1 month or so. For the time being, the stock has spiked up to the high point of the day. Well, it's that time of the day when we come to know what's going on in dealing rooms. Nimesh joins us to tell us what is he picking up. Well, Nimesh, good start, and we're holding on to that, but not much follow through.
Absolutely. Nigel, it looks like more of a relief short covering rally on the back of strong global cues. Post the gap up opening, there's not been a big follow-up buying, so to speak, from the larger institutions. In fact, I understand the flows are going to be mixed even in today's trade. As I said, it looks like more of a short covering rally across sectors, whether it's financials, whether it's metal names, or for that matter, even Siemens stocks have seen a bit of recovery after yesterday's sharp fall, largely on short covering. So it looks like more of a short covering rally today. But one consistent segment, which is the broader markets, that's been consistently outperforming entire this week. Even in a falling market, they were doing good. And today the index is at 1.5%. And there are a lot of stocks which are buzzing into it and on good volumes as well. So the momentum clearly stands towards the broader markets. But I guess the rally seems to be largely on short covering on back of strong global cues.
In terms of individual stocks, Nimesh, what do you have?
So, Prashant, in terms of individual names, the first stock on my list is the Dream Folks. That stock has been buzzing the last couple of days. Even in today's trade, good volumes. Stock is up 3.5%. I understand a domestic mutual fund is an active buyer in that stock, and largely the selling seems to be over as well. So that's the reason why that stock is buzzing off late. The second stock is Mankind Pharma. That's been buzzing on back of strong Q2. But there's going to be a large block deal, is what I understand, in the company very soon. Remember, the lockup for a lot of investors end on November 6th. So post that, expect a large block there. The third stock is Vedanta. For the last few days, some bit of HNI action seems to be back. A lot of flows as well. And I understand and there's a lot of chatter as well about some corporate development in Vedanta very soon. So that's something to track there. And the last one is RK Forging. The company has already announced the intent to raise money via QIP. Now it looks like the QIP is round the corner. So expect a fundraising from the company very soon. And that's going to be around 1,000 crores via QIP issue.
All right, Nimesh, thanks a lot for that. So those are a bunch of stocks that we'll keep on our radar, as Nimesh has spoken about some D-Street chatted around it. Just keep an eye out on Delta Corp as well. It's been one of those stocks which has fallen a lot from the highs, nearly half from the top, but intermittently sees some of those blasts, and today that blast is almost 8% And in Delta Corp and stocks of this ilk, you usually see moves and thereafter there is some news that comes by. So we'll watch out for what happens in Delta Corp, because if you just take a longer term move, chart on Delta Corp, you'd see three major declines. The first one was when the GST Council news came by. The second one was when the first GST notice came in September, and thereafter there was one that came in from West Bengal as well, on which the company got a stay order. So it's been a big underperformer, but seeing a bit of an impact up move from the lows, in today's trading session, up around 8%. So we'll follow this story as we move along. But Mitesh Thakkar now joins in to tell you about the tomorrow trade. Mitesh, any stocks that you would buy today for reversing tomorrow?
Mangalam, I have a BTST on Polycab. I think it's trading near the day's high and a good recovery from after a good correction. So BTST here with a stop at 50.25 for a target of around 50.90 on the upside. And the other one which I like as a BTST trade is Reliance, which I think has been trying to find bottom. So BTST here with a stop at 23.09 for targets of 23.45.
Okay, all right. Thanks a lot for that, Mitesh. In fact, Deepak Fertilizers is under pressure post their numbers. Sonal joins us to run us through the fine print. Sonal?
Thank you so much for that. It's the second quarter of weakness that we are seeing in Deepak Fertilizers and petrochemicals, driven by their chemicals business largely. Even the fertilizers business has come in for some bit of pressure right now. Now remember, the revenues this time around are down just 11%, but EBITDA is where the bigger decline has come, down 42%, leading to a margin contraction of 11.8%. This margin number is at a multi-quarter low for the company. Profits are also down 78%, and that's why the big fall in the stock price as well. As I said, weakness is seen in both the segments for the company, be it the chemical segment, which is the higher contributor to the EBITDA. That's where the EBIT has come in at 250 crore rupees versus 434 crore rupees. And if we look at the fertilizer segment, that's where the EBIT has actually halved on a YY basis. And this is because of lower subsidy rates as well that we saw in the quarter gone by. Now, if we look at the EPS, the first half is understandably weaker. EPS has come in at 13.4 rupees versus 58 rupees on a YY basis. And this compares with FY23 EPS of almost 98 rupees. So yes, if H2 is not better than H1 in a way, there could be some pressure on profitability as well. But there has been some uptick in prices in the month of October. We'll have to see whether that sustains or not. But for now, it's a weak set.
All right, a weak set coming in on Deepak Fertilizers, and the stock price telling you that as well, down almost 7% as we speak. Let's welcome Amrish Baliga also on the show. Amrish, good afternoon. Your thoughts on Deepak Fertilizers and also on Delta Corp. It's seeing an unusual 7-8% move after a big drubbing that we saw.
Deepak Fertilizers, I don't track it very closely, but Delta is something which I've been suggesting people to buy, especially after this news of GST and the stock cracked majorly. Because if this sector has to pay that amount of GST, the sector will shut down. So I really don't think, that's going to finally happen. There would be a stay across, just like the way they got for the Calcutta case. So I really don't think there'll be much of downside from here. If one can hold on possibly for the next 3 to 4 quarters, I think it's a great time to even buy, even at these levels, despite we seeing it move about 8 to 10 rupees today.
Okay, all right. What about Amrish? You normally join us and you talk about one stock that you have researched on and you like. Could you tell us which one is that? KEC, I think?
KEC is one which I like. We saw the earnings yesterday. It's one of the largest power transmission tower manufacturers and power sector EPC contractors in the world. And they have operations in more than 100 countries. In fact, they have done a strategic shift from transmission and distribution to non-T&D portfolio. So currently it's about 50-50 is the ratio. A railway segment is expected to be an earnings driver going ahead. However, Q2 was weak for them for this segment. But currently, the order book is about 13% of that is railways. Civil construction vertical comprises about 33% of the order book, and that's growing fast due to the government focus on this space. Overall, the order book and L1 position is quite robust at about 35,000 crores, and strong bid pipeline shows the visibility. So I think that's quite excellent. Q2 earnings were mixed. Like I said, it came yesterday. Revenue was up about 11% against my expectation of about 25%. But EBITDA was much better than expected at 54% increase. Consolidated EBITDA margin, I was expecting it to remain flat, but that's improved to about 6.1. It was 5.8 last quarter. Over the next 3 years, I'm expecting a 21% CAGR in revenue, whereas the FY25 EPS, my expectation is about 38. So I'm looking at a price of about 760.
So sharp acceleration then, right? Because I think revenue growth is about 15% or so far. And it's a business, as you said, which has been around 6-7% margins. It's mostly an EPC company. So
yeah, it was about 4.5, if I'm not wrong, last year. Last quarter was 5.8, and that's gone up to 6.1. And I see that, increasing a bit more from here going ahead. But then we'll see a major acceleration in the EPS because if I'm talking about FY24, I'm looking at about 18, and FY25, I'm looking at 38.
Okay, all right, fair enough. We'll take another quick commercial break here. Amrish is with us. There's 10 minutes to go for close. Stay with us. Okay, welcome back. So 150 on the Nifty. We're at about 19,140. A little bit of a spike coming through, but that's about it. We're basically at opening levels. Amrish is with us. Amrish, you may want to listen into the next story. This is the insurance space, right? Kotak General Insurance has got an investor. Let's just talk about that in terms of valuations and what this could mean for other listed players. There aren't that many. ICICI Lombard, of course, is the more prominent one. Yash is standing by. He's looked at valuations at which this deal has happened vis-a-vis where players like ICICI Lombard traded. Yash, go ahead.
Well, Prashant, it's after a very, very long time that we've seen investments coming into the insurance sector. And as far as this particular transaction is concerned from Zurich Insurance and Kotak General Insurance, Kotak has managed to do a good deal for itself as far as the valuation is concerned. As far as this particular transaction is concerned, when we look at on the basis of gross written premium, the transaction happens at 4.85 times price to gross written premium, with the company, if you see, a sizable amount of time into the market but hasn't done very well. Market share of just 0.5%, H1 FY23 growth of about 35%, and the loss at about 8,300 crore rupees. Compare this to ICICI Lombard, of course similar amount of time into the market, but that trades at a valuation of 2.93 times price to gross written premium. New India in fact trades at a discount to gross written premium, about 0.62 times to gross written premium. So as far as the company, that is Kotak General Insurance is concerned, getting a good valuation for Kotak Mahindra Bank as far as this transaction with Zurich General Insurance is concerned.
All right, Yash, thanks a lot for that. In case you missed Yash's analysis here, you can obviously always log on to our website, CNBC-TV18.com, and Yash has written that as an article as well. Should be up on our website soon. But Amrish is still with us. Amrish, your thoughts on the insurance space and this deal that has happened?
No, I mean, this deal has happened at an extremely good valuation, but I don't think I will see a rub-off of that on the other listed players, basically because here you're talking of management control and just not a strategic stake as such. So I suppose, I mean, it can be sentimentally positive, but I don't think it will sustain for the other insurance companies.
Okay, all right. Amrish, Prashant was discussing the JP Group stocks earlier as well. JP Associates now flying away at the high point of the day. HCC as well has moved higher, Suzlon as well. Any of these, fallen stocks, so to call it, that maybe have some business sense left in them? Any of them you're looking at? Because everyone's searching for turnaround. Some of them do, but some of them actually, they fizzle away.
No, Suzlon, I think, is a clear case of a turnaround, and they've been able to set their balance sheet right. And I mean, I'm assuming that we could, there could be a buyer for Suzlon, it could be a management takeover, especially post Mrs. Zanti's death. I think there can be a management change. I mean, that's what I'm betting on. And even at these levels, possibly I'll just hold on to Suzlon because I've been a buyer at much lower levels. Although I booked some profits, but the balance I'll surely hold on. The other stock would be HCC, where you still see them doing extremely well as far as the execution goes, and the order flows has been good. And here also I expect the balance sheet should be set right possibly over the next 18 months to 24 months. The stock which I'll possibly ignore, or maybe if I have in the portfolio, I'll possibly look at exiting, is JP.
Thanks a lot, Amrish, for joining in and giving us your view on a whole host of stocks. And before we meet you the next time, wish you all the festivities as well. But it's time now to, look at the market wind down. It's been a good trading session. The market opened well, up almost 140 points. From there was a bit of profit taking. And from then on, we moved higher. The dip was bought, and we're closing virtually at the high point of trade, which was also, the similar level as the open itself. So for the record books, we'll go today with a gain of almost 160 points on the Nifty, over 500 points on the sensex, 300 points plus for the Nifty Bank. The Midcaps were the star of the show. Among the top gainers on the index today was Britannia, up almost 3%. The street liked the margin expansion on that counter. Metals also made second half comeback. So Hindalco was the second highest gainer on the index. We saw recovery from lows come by on Tata Steel post the management commentary as well. On the way down, however, Hero MotoCorp was down almost 1%. The results were largely in line with expectations, but there was some profit taking. In the mid-caps, which were the stars of the show, we had a couple of names. REC, PFC, they continued to do well. Vodafone Idea was up around 8%. Delta Corp 2 ended higher by about 7%. More stocks advancing than declining. Over 2,100 stocks in the green, or just about 900 stocks in the red today.
Plenty of stocks, Mangalam, that were flying away. The JP Twins, JP Associates up and about. You had SEPC, that stock has been moving, and today it was moving on very high volume. So SEPC, more than a 2,000 crore market cap company, locked in upper circuit, up close to 10% today, 22 rupees stock. You had JK Tyre, well, that stock was up close to 10%. Vodafone Idea as well was flying away in trade. That was up close to around 8%. So a lot of these stocks that actually have not been big wealth creators, but they did well today. Suzlon, case in point, street like their numbers. Jyoti Structures, another name in there. all these have not really done well if you look at it over longer term horizon. But these stocks did pop up and trade. So some of those portfolios will be feeling good that particularly have exposure to the small and the mid-cap space.
No, absolutely, Nigel. So for the week, if you can just quickly look at the indices, that's right. Actually, we got one more day, right? I was going to wrap up the week.
Prashant's in a hurry. Prashant's definitely in a hurry.
That's all right.
Are you coming tomorrow?
I am coming tomorrow, very much. Let's actually modify that to the week so far if you want to. But in any case, I mean, it's a good sort of Thursday, 0.5% higher. Looked like it would be a bigger day. Was not the case, but I guess that's what we got. 0.75% on the Nifty Bank. Let's just look at the Nifty mid-cap and small-cap indices. Mid-cap index ends about 1.5% higher. And you got the small-cap index, which ends about 1.5% up as well. The small-cap index, guys, is the strongest part of the market. It's now, it fell 7%. It fell the most in those 7 sessions. And it's basically now retraced the maximum. It's I think, about 2.5% from its all-time highs.
Yeah, and as we wind up the markets, Virat Kohli is lifting up his bat. He scored a quick-fire 50. Our boys are in good form. And Shubman Gill on the verge of another 50. So feeling good towards the end. And hopefully Prashant turns up tomorrow.
Yes, wonderful, feeling wonderful. It'll be poetic if Virat Kohli does get that 100 in today's match, and that will be because it was yesterday where Sachin Tendulkar's statue was installed on 1K day, and if he does that, he will go ahead and meet Sachin Tendulkar's ODI record. If that were to happen, the mantle has
missed the last one by 7-8 runs, right? I mean, he got to within 92 or something.
No, it was.
He was supposed to equalize.
Equalizer. He got it by about three runs.
I was fearing for Prashant. Actually, when you said it was poetic, I said you're going to go for another digger.
No.
Anyway.
Well, we'll wrap up things here. It's goodbye from all of us on the Closing Bell team. Thank you very much for staying with us. It's a wrap here, but don't go anywhere because programming continues. And our Thursday special, Big Deal, comes up next.